The trading boundary. Topic 7. What is a trading system? Hi everyone, welcome back to the channel. Today I want to talk about something that every trader hears about, but very few traders actually understand, and that is a trading system. A lot of traders say, I don't have a stable system yet. But when I ask them what their system is, they usually say something like, I trade breakouts, I check support and resistance, I look at order flow, I follow price action. But the truth is that is not a trading system. That is only a trading idea. A real trading system is much deeper than that. Today, we are going to break it down step by step. Part 1. What is a trading system? A trading system is a complete decision-making framework. It tells you exactly what to do in every situation, not just when to enter, but also when not to trade, how much to risk, when to exit, when to stop trading for the day, when to reduce size, when to stay completely out of the market. A real trading system answers every important trading decision. If you feel emotional while trading, it usually means one thing: you don't have a complete system yet, because a system removes decision stress. Part 2. The 5 core components of a system. A complete trading system usually has 5 components. 1. Market selection. First, you decide what markets you trade. For example, ES, NQ, CL, Forex, crypto. Different markets have different personalities. Some move fast, some move slow, some trade more, some chop more. A system must be designed for one specific market behavior. 2. Time selection. Next is when you trade. Markets behave differently at different times. For example, in futures, pre-market, open, midday, close. Some traders only trade the first hour, the morning session, specific volatility windows. Because your edge might only exist at certain times. If you trade all day randomly, you dilute your edge. 3. Entry rules. Now we come to what most traders think is a system: the entry setup. Examples: breakout, pullback, support, resistance rejection, trend continuation, liquidity swap. But here is the key. Your entry must be clearly defined, not something vague like I feel like it's going up. A system entry should look more like break of structure, pull back to previous resistance, rejection candle, momentum confirmation. It should be repeatable. 4. Risk management. This is the part that actually determines whether traders survive. A trading system must define maximum loss per trade, maximum loss per day, maximum position size, when to stop trading. For example, if your account drawdown tolerance is $2,000, your system must be built so that you never emotionally panic before reaching that level. Many traders blow up not because their strategy is bad, but because their risk is larger than their psychological tolerance. So a good system always aligns risk size equal emotional capacity. 5. Exit rules. Finally, you need to know when to take profit. Many traders are good at entries, but terrible at exit. A system might define fixed target, structured target, training stop, partial profit. Without exit rules, profits become random. Part 3. The real purpose of a trading system. Most beginners think a trading system is designed to make money, but that's actually not the first goal. The real purpose of a system is to keep you alive in the market. Your first goal is survival, because if you survive long enough, you gain screen time, experience, pattern recognition, emotional stability. Eventually, your edge becomes clear. So the first rule of a system is very simple. Do not blow up. Part 4. Why most traders don't actually have a system. Most traders say they have a system, but in reality, they only have a setup. A setup answers only one question: when do I enter? But a system answers everything. Should I trade today? What if I snap badly? What if I already lost 2 trades? What if volatility is low? What if I feel emotional? If these situations are not defined, then you are still making decisions emotionally. Part 5. A simple example of a personal trading system. Let me give you a simple example. A trader might define their system like this. Market. NQ futures. Trading window. 7 a.m. to 9 a.m. 9 p.m. to 10 p.m. Entry model. Break of structure. Pull back to previous level. Momentum confirmation. Real risk rules. Max loss per trade $100. Max loss per day $300. Stop trading after 3 losses. Position sizing 1 to 3 micro contracts. Trading conditions: no trading if sleep less than 6 hours. Reduce size if emotional. No range trading. Profit rules: take profit as structure. Stop trading once daily target reached. Now, this trader has something important, not a strategy, but a framework. Part 6. The hidden benefit of system trading. When your system becomes clear, something interesting happens. You stop chasing trades. You stop forcing trades. You stop feeling anxious about missing moves. Because you know, if the setup appears, you trade. If it doesn't appear, you wait. Your job becomes simple. Follow the process. Trading success is not about predicting the market. It's about building a system that protects you from yourself. So if you are struggling in trading right now, don't ask, what is the best strategy? Instead ask, do I actually have a system? Because once you truly build one, trading becomes much quieter, less dramatic, but much more stable, and that is where real consistency begins.